Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is a very, very special chicken, and that chicken is Doomberg. Welcome back, sir.
Ivan, Jim, great to be back. Huge fans of the show, as you know, and love every appearance that I've had so far and looking forward to this one.
Yeah. Hey, Doomberg, you just had another great article. Let's get that on the screen for everyone. And here, I'll start on your Twitter account here. If anyone wants to go find it, it's pinned at the top of Doomberg's amazing Twitter account. So everyone should, if you're on Twitter, folks, number one, follow Doomberg, but then also subscribe to his Substack here. But we're here to talk about your latest article, which is titled When Bazooka. And that's sort of a, doesn't really explain what the article's about, but that's what we're here for right now, is to dive into this one. And you know, we're Wall Street Silver, silver and gold, but this is about sort of the financial crisis and bailouts, and that happened. Well, I'll let you say it in your own words. You tell us.
You bet, Jim. And so when bazooka is actually a play on a crypto phrase, when Lambo, which is, when are we going to get our big payoff and become rich?
Yeah.
And bazooka, which is sort of the key to this article, is what former Treasury Secretary Henry Paulson famously described the TARP bailout of the global financial crisis as being. He bragged that, if everyone knows you have a bazooka, you might not even need to use it. And so the heart of this article is really the birth of many of your viewers' desire for hard money, which was the bailout of Wall Street in the global financial crisis. And I lived through it. You guys lived through it. I'm sure most of your viewers have lived through it. And that was a really seminal moment in the history of American finance, because essentially contagion was stopped, criminality was covered up, and public resources were used to socialize private losses. So the story is widely known, but I'll tell it briefly. During the height of the global financial crisis on Monday, famous Monday, September 15th in 2008, Lehman Brothers filed for bankruptcy. And Henry Paulson went to the White House and said there would be no bailouts. And the next day, he was forced to bail out AIG, the massive insurance giant.
Yeah.
And as we described in the article, the bailout of AIG was actually a bailout of the rest of Wall Street because they were counterparties to everybody. And if AIG had fallen, Wall Street would have fallen. And the net result is the public balance sheet was used to bail out bankers on Wall Street. Only one banker has ever gone to jail as a result of that massive dislocation in our financial economy. And coincident to that was, of course, a rebirth of our appreciation for precious metals, certainly mine and yours and Ivan's, but also at the exact same time, literally within days of the AIG bailout, Satoshi published his famous Bitcoin white paper, and the birth of Bitcoin is intimately tied to the bailout of AIG and the TARP legislation, $700 billion bazooka.
I remember at the time it used to be a huge number. And remember, it failed the first time Congress wanted to vote on it. And then the Treasury Secretary said, tell them to go back and vote again, right?
Until the markets tanked huge that day. And so when bazooka is actually, there will be no bazooka for crypto, which is a wonderful thing. So in a way, so Bitcoin was born that week. The rest of crypto has sort of grown around it, and the entire entity has grown into this massive $3 trillion entity at its peak, the aggregate of the market value of cryptocurrencies. And it has since collapsed by two-thirds. We're seeing huge amounts of contagion. We're seeing firms go bankrupt. We're seeing customers lose their money. But what we're not seeing is any bailouts. And there will be no bailout of crypto, which in a way is a very good thing. But at the same time, that means, interestingly, we are running the exact same experiment that we didn't run in 0809. And so what we're really seeing play out in the crypto space right now is a replay of the experiment that we intervened in and did not allow to happen in 0809. We're seeing massive contagion. We're seeing firms go belly up. We're seeing other firms that were tied to those firms or may have large exposure to them suddenly filing for bankruptcy. We're seeing massive pain on the part of consumers, which is unfortunate. But the medicine is being taken. And unlike in the global financial crisis, where the full and violent forces of economic destruction, of creative destruction, are going to be allowed to play out. And we believe, and we predicted in the piece, that the things that come out of that, the things that survive the explosions, that rise from the ashes, much like the good companies that made it through the dot-com crisis, like Amazon, could go on to be really interesting investments. But there's a lot of pain to come and a lot of washout to get to before you would even look at the space, in our view.
Yeah, so we've still, we're referring to things, just to put some names on things. We're talking, Terra Luna. Luna's already completely gone to zero. A few others have lost, 80 to 90% of their value. Some of the exchanges have completely blown up, with just huge capital holes in their balance sheets. And the big question mark everyone has, though, is Tether, right? And
yeah, so that's a great question. And the names, as just a bit of history, Terra Luna blew up for sure. And then a lot of the big names in the space were tied to it, and we're kind of avoiding publicly commenting on it. And then the real domino, the real sort of Lehman Brothers of this incident is Three Arrows Capital, which is a hedge fund. And they had massive exposure to Luna. And then they had borrowed a huge amount of money from virtually all of the big name crypto lending firms. And all of those now are in trouble and needing bailouts, private bailouts, I should add, from Sam Bankman-Fried and others. But also many are going bankrupt. So Voyager, which is a publicly traded crypto lending firm out of Canada, or trades in Canada, filed for bankruptcy. Celsius has frozen withdrawals. Interestingly, the founders of Three Arrows Capital have ghosted everybody and disappeared. It's a classic, and we're talking at their peak, the estimates are they had probably 10 billion under management, billion with a B. Like there was a time, when billion was a lot of money. It's crazy to me. It's amazing.
When they've got 10 billion to play with in the crypto world, it's really easy for 100 million to disappear.
Right.
I mean, it would not surprise me at all. These guys have ghosted everyone. I don't know, skip town. Yeah, they got their 100 million parked in some jurisdiction that doesn't have.
This is crazy.
I don't know. I have no idea how bad this is going to get for the crypto world. I hope it's not too bad, because a lot of this could bleed over to the real economy. If people feel less wealthy, or people have huge holes in what they've lost, that's indirectly affects everyone, right?
Yeah, it's amazing we haven't seen more, because at its peak, the crypto world had a mark-to-market value of 3 trillion, and now it's been cut by 2/3. I mean, that's basically 3 times the size of the TARP legislation, vaporized on paper and paper gains. And I would say, just to complete the analogy, if Three Arrows is Lehman Brothers, I would say Tether is AIG. And it remains to be seen when Tether gets in trouble, but for sure there will be no bailout for Tether. That's what we think is coming.
So how can Tether claim to still have all the reserve assets that they claim, if some of the money, the billions of dollars of the money they loaned to Celsius or Terra Luna or any of these others is gone? I mean, how can Tether still, with a straight face, hold a buck?
Until we have a full and complete audit by an accredited accounting firm, I don't think you should believe anything Tether says. They are like amazing. They claim to have 1-to-1 complete backing with thorough liquidity, and yet they're investing in risky assets that aren't liquid, like loans. And then, or they have exposure to sketchy firms, large exposure to sketchy firms like Celsius. Celsius goes belly up, basically. They haven't filed for bankruptcy yet, but they're working with restructuring advisors, and they've frozen withdrawals of all of their retail customers. And yet they claim they were able to liquidate everything and suffered no issues, and everything is fine. Like it defies.
It doesn't add up. It defies belief.
It doesn't add up. It defies belief.
And I think Tether still is in the 60 billion range in assets.
66 billion, which, to put it a number, it's roughly a full Enron.
Yeah. Wow. But I mean, so let's say maybe they've lost 15 or 20 billion in all this stuff. I'm just throwing out a number. Would we not hear about it? They can handle redemptions for Tether shrinking all the way down to probably 20 or 15 before it really becomes obvious that the rest of it's not there. Or when does this blow up? I mean, what's the key?
It all depends on what the sort of liquidity leverage ratio is. So if their market cap today is 66 billion, how much cash in the bank do they have? And cash being, literally money on deposit, or T-bills, but less than 30-day, super liquid T-bills. Whatever that ratio is, and we don't know. They claim it's 1-to-1. So, and if that's the case, then they could redeem all the way to zero and there would be no crisis. But if it isn't the case, if it's some number, less than that, let's say 1 to 4 or, 1 to 8, then, as redemptions come in, and it's not even clear what a redemption is, who's redeeming and what's being exchanged. There's only so many large firms that actually sort of redeem at scale with Tether. The whole thing is a black box mystery. But let's just, as their quote unquote market cap goes down, in theory, unless they're, raising liquidity and decreasing exposure to, the riskier aspects of their portfolio, then in theory, then that leverage ratio, continues to get worse. But it's just a joke that somebody can claim to be, basically a dollar equivalent 1-to-1 redeemable and not have an audit and be 66 billion. I mean, that's a lot of cheese.
Now, isn't that also, Gensler, he's the current guy in charge of the Securities Exchange Commission, the SEC. The question marks around Tether is the reason why he keeps denying Bitcoin a spot ETF, correct? You've written about that?
That's correct. Yeah. Because a spot ETF would funnel retail money directly into Bitcoin. And so he's just refusing these. And he points to the Tether fraud, which is amazing that the SEC would point to a major entity with a $66 billion market cap as being responsible for the fraud that they see in the market and why they're not approving these spot Bitcoin ETFs. And yet they do nothing about Tether. That's the part that boggles the mind. Like if you and I committed fraud, they'd be coming to our office tomorrow. Like there'd be no waiting around for Jim and Ivan or Doomberg.
Yeah. Do they not technically have jurisdiction over crypto, or have they not just asserted it yet? Or with all these scams that are going on in the crypto world, why haven't there been arrests yet? I mean, the Celsius guy I heard was denied permission to leave the country. They stopped him at the airport. I don't know if he was actually arrested though yet.
I put that in the rumor category. Yeah, I would put that in the rumor category right now. It's unconfirmed. I mean, it's believable, but that's the best rumors are. But I would say the SEC doesn't necessarily need jurisdiction. They could work with the DOJ. When was the last time an aggressive prosecutor couldn't find a crime?
Yeah,
if they went looking for one.
Yeah,
the DOJ with wire fraud is very easy crime to, if you, Jim, went to your bank account where your money resides today, that you've already earned and paid taxes on, it's your property on deposit at a bank, and you decided to withdraw $9,900 twice in the same day, you would be investigated for and likely charged with structuring.
Really?
Yeah, you get that. That's a law. It's a crime that was implemented after the Patriot Act, and because the government would assume that you're trying to hide from them this $10,000 reporting requirement, and so you would be structuring your withdrawals.
Oh, so you're keeping it under 10.
To keep it under 10. And so if you went and withdrew, in fact, if you went and withdrew $9,999 today without doing it more than once, you'd probably get a lot of questions from your bank. And yet these people are flinging around billions of dollars, parading themselves as the equivalent of the US dollar. and they're just, it just boggles the mind. It's really amazing. There must be something that we're missing. When the full history of this is written, we will be eager readers, but it's just truly crazy to watch. And so, Bitcoin was not meant to be this, by the way, and I would put a deep distinction and a delineation between Bitcoin and crypto. And, I would say the price of Bitcoin has been influenced and manipulated by some of the people on the grift side of the ledger, but the true Bitcoin maximalists hate the grift as much as you and I do. And so, the washout is probably welcome to many of them because they don't really care about the price of Bitcoin. They care about having, their own keys in cold storage. And if they're true believers and they think Bitcoin is going to be the sort of digital currency of the future, the current mark-to-market value of it in US dollars is of little concern to them. For the traders and the speculators, that's a different story. Much like you and I might measure our worth in ounces of gold or silver, these people measure their worth in number of Bitcoins they hold.
Yeah.
And I tip of the hat to them. If that's what they believe, then this is America. They should be allowed to buy it, own it, store it, and keep it. But the grift has just been amazing. And really, that's why we started the piece with the global financial crisis and the actions that the government took. And we're going to run this really interesting experiment of what happens when a really big economy collapses in contagion and nobody does anything about it.
Yeah,
which is great.
there's not, yeah, we're not gonna have any of that this time. It's gonna be just purely let it fail. I think the government's sitting back and actually cheering it on to watch it fail. At least the key people, decision makers are. Some of the congressmen seem to be, and senators seem to be pro crypto, trying to help it, probably because of campaign contributions. But
Yeah,
overall,
keep a close eye on your wallet when you're around those folks. Yeah, that would be my advice.
but it seems like overall the Treasury and the Fed, they've got their own competing central bank digital currencies that are in the pipeline that they're all preparing, and they probably are probably fine. They're probably fine with the existing cryptos just muddling along until they're ready just to replace them, right?
Also, I would say that this crypto crash has been anti-inflationary as well.
Yeah,
and it's actually an example of financial tightening where the Fed doesn't have to do much. A lot of perceived consumer buying power has been wiped off of people's personal balance sheets with this crash. 2 trillion.
yeah.
I mean, that's a lot, And,
Well, think of all the would you say the generation that is most into cryptos are the millennials?
Certainly it skews young, but also I'd say there's a subset of people our age who view Bitcoin as their version of silver and gold.
Yeah.
They're not necessarily anti-silver or gold. They just think this is sort of the next iterative improvement over what gold and silver were meant to be. And with the futures market in gold and silver being susceptible to the whims of central bankers, in theory, they say Bitcoin is pure. We would counter argue that the price of Bitcoin has shown that it can be manipulated because of Tether and other associated factors. And so, but much like them, I mean, when I buy gold eagles or silver eagles, I don't necessarily care about the price. I have a subset of my personal allocation directed towards ounces of gold and silver, which is a floor on my net worth, regardless of what the government does with the fiat. And so much like land and other collectibles, we don't yet have any cryptocurrency. It's just not something that we feel comfortable. We're a no coiner at this point. But we certainly have our own physical gold and silver and some paper investments in the space as well. So I don't, again, separating crypto from Bitcoin, let's say the Bitcoin crowd and the maximalists are a lot closer to gold and silver than crypto is. I'd say crypto is much closer to speculation and stonks. Whereas Bitcoin at least tries to be hard money.
The Bitcoin people would actually, the Bitcoin people would actually step up and say, crypto is something different. We're not crypto, right?
Correct.
They are very, very loud
Adamant.
about the point. Adamant is a good word. Yeah, you can talk about crypto all you want. That's not Bitcoin.
And they have a point.
Yeah,
it isn't.
But Bitcoin's been dragged into the crypto ecosystem with Tether, and Tether is connected to all these other cryptos. So, you're right. It has to wash out. I mean, and what survives all of this, this chaos is probably going to emerge stronger, like Amazon emerged from the internet bubble.
Exactly.
So it remains to be seen who are the winners and losers, though, and which exchanges will survive. Do you have any thoughts on that in terms of exchanges, or are you one of those? I know you don't own it, but would you keep it in cold? If you did own it, would you keep it in cold storage?
Yeah, I would certainly never trust as much. I mean, about the only place that I would buy physical paper is the Sprott. Otherwise I prefer to own it myself, store it myself. Same thing with crypto if we were involved in it. And I would say one lesson from the dot-com crisis and the washout that happened is it's okay to be a little late, but to make sure that the bottom is in, than it is to try to catch the bottom. Right. You were just fine if you bought Amazon 9 months after the bottom. I would wait in crypto for the true bottom to be in, and then wait a little more, and then you'd be safe to make sort of a generational investment, because trying to catch the bottom is really, really tough. But it's the same thing we learned, at the bottom in March 2020 in the stock market. If you had waited 2 months after the recovery to get back in, you still did just fine. If you never got back in, you missed a great run. And if you tried to catch it, you could be 40% down before the run begins, and then you're going to wait a lot to get back to par.
Mm.
And so if I were looking at the crypto space, I would wait plenty of time. And then again, there's people who are trading, there's people who invest, and we don't trade. So just to be clear, this is sort of more of an investment thought, although it's not investment advice. For us, we wouldn't even begin to look at it until we see a crypto executive being perp-locked, a big name crypto executive, of one of these scams. And even then, you might wait. So if you'd bought Amazon in 2003, long after the dot-com bubble had burst, you were still just fine.
Yep. Well, Doomberg, as always, you're a treat to have. You're by far our favorite chicken on the channel, and we will definitely be calling you again. You have great articles that come out almost roughly on a weekly basis.
6 to 8 a month, so about 1.5 a week.
Yeah, 1.5 articles per week. But you've become a huge hit on Twitter with your Twitter account and with your content. Everyone loves it. Everyone raves about it. And I would encourage everyone to check out Doomberg's Substack. And we will leave the link in the description, sir.
Awesome. Thanks, guys. Anytime.